Hello traders, Gary Wagner here just before 12 noon in Honolulu, 5 o'clock in New York. It is Monday, November 18th, 2019, and this is the daily report for gold and silver. We did have modest gains in the precious metals markets across the board, and dollar weakness was a great contributor to that fact. Gold gained almost $3 on the day, and after a modest decline occurred on Friday, we pretty much saw that ground being taken back today. We'll talk about pricing in just 1 second. The other key issue is real uncertainty as to the current state of the trade war negotiations. Whereas it had an optimistic tone towards the end of last week, which was a great contributor to gold weakness, we had the exact opposite today, with China coming out and saying that they are pessimistic about the current state of just phase one agreement. Of course, if they can't come to agreement with an interim negotiation focusing on some of the narrow aspects of the current trade dispute, it seems more unlikely that the trade war itself, the larger issues, will get resolved in any quick amount of time. Let's take a look at current pricing. Currently, we have gold trading up $3.40 at $1,471.90. We are long a position, which we will talk about in detail as we pull up our technical studies. Silver also gaining on the day, just above $17 now after a 6+ cent gain on the day at 17.01.5. Platinum also trading nominally higher, 896.80, and platinum gaining the most in terms of a percentage gain and price gain, gaining $19.60 at 17.02.10. All of the precious metals gained from dollar weakness today, closing off about 0.2% in 18-point decline, with the dollar index currently at 97.69.5. Let's take a look at our current technical studies. The first chart that we are looking at is a weekly chart of gold futures. This chart, of course, contains the entire data set we use for a major Fibonacci retracement, going from the lows achieved at about $1,040 back at the end of 2015 after a multi-year correction concluded, up to the high achieved this year coming in at about $1,565. When we do that, the first level of interest, of course, is the 0.23% retracement level. We can certainly see that last week was really a key week for two critical important reasons, the first of which is the fact that it hit the lows of the 0.23% retracement and then bounced off of that. We'll see that much more clearly, of course, when we pull up a daily chart. And the second fact is that after this large decline on a weekly chart, we saw a recovery of gold pricing, and at least as far as Monday is concerned, today we have traded to an equal high. That is current minor resistance, of course, and we did close higher on the day, which means we closed above the close we achieved on Friday. Traders, as you recall, we went long gold last week, and this all started really at the beginning of the week, this being Friday's candle here. Thursday, Wednesday, Tuesday is when we hit that low, and Monday is when we made our first real observation that we were getting very, very close to the 23.6% Fibonacci retracement level, which occurs roughly at 1446.10. On Tuesday, we matched that low within 10 cents with an intraday low, I believe, of 1446.20, and then we made the observation that we got a nice bounce off of that on Wednesday, which is why we put out a trade alert that said that aggressive traders can get in right here, and at that point the market was trading at 1464, and conservative traders would wait until the open of the following day and let it uptick, which takes you anywhere between, say, 1465 and 1467. So traders are long this market between 1464 and 1467. We are currently at 1471.90. What is most noteworthy about today's activity is two things. The first thing is that we certainly made the ground back from Friday's decline in the market. And the other thing is this extreme low that was hit. That came in, I believe, at approximately 1456, before recovering tremendously, and not only recovering, but closing higher on the day. We're still just a couple of ticks away from the highs achieved last week, which I believe are 1473 and change. It is for that reason that my recommendation is that we maintain our long position, and we will look to move our stop up, and we will look to move it up just behind this low here. We'll put out a special trade alert, but I'm looking at 51, 52 as the area that I'm comfortable trailing our stops back up to, because I do not think we're going to take out this low, and if we do, we certainly don't want to be long. But I think if we take out the lows of today, that would be a very bearish signal for the future direction of gold. The problem that we're seeing is we are going from day to day with an exact opposite of the former day's tone or outlook. Last week, towards the end of the week, we had an extremely optimistic outlook, and that caused some weakness in gold. That optimism had a 180-degree pivot today when China came out and said they were pessimistic about the current state of negotiations for a Phase 1 agreement. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the next daily update and review. Bye-bye.